Hi, I'm Ted Oakley, Managing Partner of Oxbow here in Austin, Texas, and just wanted to give you a little December year-end look at what we've been talking about this year with all you business owners that have sold in the last 18 months. Most of you get the things we send out and you hear what we're saying. You'll know that we talked about the fact that keep your powder dry, you just sold a company. Why go into the stock market if we think there's risk? And so I'll let you know what happened this year and how that worked out for everybody. Hopefully you listened to us as we went along. Let's take a look at the stock market, for example. This year in the stock market, this is the beginning of January, the S&P 500. And as we talk today, actually we're down again today some 500 points. You'll see that the market is dead even for the year. And today it's actually a little lower than that. But what this means for you as an investor with all those Wall Street people that want you to go out and buy index funds is you didn't make any money this year, but you've certainly taken a lot of risk to make zero. And you probably, by the time it's over with in 19, will take a lot of risk to make a negative number, which is why we mentioned in the beginning, when you sell your company at these levels, you, on the other hand, are not coming in at a level where everything's really cheap. You need to listen up and try to do some work here and trying to keep some liquidity, because even though you sold at a great time, you're not buying at a great time. So let's look at asset classes around the world. What you'll see is in asset classes, and this goes back to 1900, over 90% of all asset classes, and that is every asset class you can imagine. That's every commodity, that's every currency, that's every stock market, that's every bond market, that's all energy, that's real estate, that's everything. 90%, all-time record number, 90% of all asset classes are negative through today. What does that mean for you? That means that you're not smart enough to outsmart this, okay? Meaning that, yeah, you were great in your own business and you had it down, but don't believe all these Wall Street people here. This is not the time to get out and mesh yourself in all these asset classes, because it hasn't worked this year at all. Chances are, if you didn't stay liquid like we mentioned to you the last 18 months, you're probably negative this year, no matter what. So if you look at what cash would have done for you this year, and that's what we mentioned during the, really particularly over the last 9 to 12 months. If you look at what cash has done this year, you'll see this. This year, cash has returned somewhere on the order of 2%. And the 5-year Treasury this year is a minus 3% or more. This gives you the other times when that happened. This is 1931, 66, all the way down through 94, and then again this year. And each one of these years, the 1-month Treasury bill, which is 30 days, outperformed 5-year Treasuries and the S&P 500 stock market. So what does that mean for you? That means that if you look, and I'll give you some final thoughts, if you look at risk reward and where you sold your company, which is here, at a really good price, by the way, unfortunately, you walked into this arena right here, which is where a lot of markets have been bearish this year. But oddly enough, it's probably the beginning and not the end. And so as we go into 2019, if you've been working with us and listening to us the last year and a half, one of the things we've stressed is, look, you sold the company, don't do anything for a while. That's now more important than ever. So hopefully that'll work for you. But if you want alternatives to where you can put that cash and really not have to worry about it at all, for the time being that is, if you would, come and talk to us at oxbowadvisors.com.